Actually picking up exclusively from my colleague Nayanatara is actually gathering this exclusive news from Delhi that PMO and Finmin and top bureaucrats are about to meet on this burning issue of FPI surcharge. This is something, Nayanatara, which the entire market would be very keen to know the details about. Tell us, what are you gathering?
So, there has been a lot of charges at what is the government doing? Why is the government not acting on the economy? Why is the government not acting on what we've seen in the markets? Well, we at ET now exclusively understand from our sources that the Prime Minister's office has finally swung into action, it seems. The Prime Minister's office held a meeting yesterday with top bureaucrats of the Finance Ministry, not just on the state of the economy, but also to take a stock of the bears being all over the last week, the massive fall that we have been seeing in the market. They want to know about this FPI surcharge, which has led to the Sensex being at the lowest level in the last 17 years. India seeing the highest pullout of foreign outflow, the highest foreign outflows in the month of July in the world when it comes to the emerging markets. So the big story is the Prime Minister's office has taken cognizance. The bigger story would be if it were to act on it. We don't know what the solution will be, if there will be a solution at all. Will Modi 2.0, will the government want to have amendments in the finance bill? Will it want to roll back the FPI surcharge? Will it look at tweaks? I think the FPIs have made it quite clear. They are demanding a rollback, which they have demonstrated in the best possible way they can, which is by pulling out money. That's the strongest demonstration that you could have from us. The big question is, and I what we talk about, the buck doesn't just stop with the equity markets, $200 billion of market capitalization being eroded since July 5th budget day. It's going to have a disastrous impact later on revenue mobilization. Whatever it is, the central exchequer and the team at Northbrook was thinking long-term capital gain, recovery and collections is gone. Disinvestment. How do you have disinvestment in this kind of a market? It's going to have a huge impact on revenue mobilization. It's going to have a huge impact on the economy at large. You're trying to become a $5 trillion investor. Foreign investors are pressing the sell button. So the Prime Minister's office swinging into action. So while I said the FPIs want nothing more than a rollback, will that possibly something the Prime Minister's office will have the final word on? Having that, there are tweaks that the FPIs have demanded as well. Make submissions via law firms is what I'm being told by my sources. They have made it quite clear that Nirmala Sitharaman and Team Finance Ministry suggest it's practical and it's not possible, at least in the near future. How do you tell pension funds to convert to companies? These are global pension funds, for example. Don't trust and invest in markets around the world. It's not possible, at least in the short term, the way the Finance Ministry was talking about. So there have been other suggestions. For example, can you have self-declaration, for example, by foreign portfolio investors? These are the direct beneficiaries. So these are the direct beneficiaries that will pay the higher tax. That's one suggestion. Doesn't need amendment by law. It's a process change. The second one, for example, what if you were to transfer tax-free transfer of shares one time into an asset? I think the FPIs have made it quite clear. And at a time where the rest of the world is also inviting what's happening in the U.S. country, but it's good to see what the Prime Minister was this FPI, or will we see big tweaks or maybe inaction as we have seen so far?
Right. Nayanatara, stay with us. In fact, Jayesh Mehta of Bank of America is with me right now. We had got him on the issue of improvement in liquidity, but Mr. Mehta, would you have an opinion? I mean, I'm sure at Bank of America you guys do discuss how sentiment has been hit because of this, FPI surcharge. And now my colleague gets this big exclusive that PM Modi's office has actually taken stock of the situation and have entered into a dialogue. We are not sure yet what can be the outcome of that, but at least they have taken stock of the matter and have sought, some kind of suggestions. Do you think it will go down well on the street to improve sentiment?
I think that's one part of it, right? I think another thing is also the overall slowdown, which is also impacting the market. So yes, it will definitely take out one negative. And as Nayanatara says, these are all global funds for them to change for India specific. Their structure is not a viable solution. And what is the allocation they have to India? That also matters in their overall strategy. change the structure. So hopefully we'll see, we'll come to know next week what is that government is deciding. But that would be one negative taken out. I think there is a lot of local slowdown, which is what also impacting the pull-out and the market, right? So I think, so it's not fully that, once this is solved and we are back to the normal market. Yeah, it may give you some relief in between.
Hi, Jayesh. This is Nayanatara Rai. So, the Prime Minister's office finally swinging into action. I think one of the reasons the markets have been spooked is because his government is not acknowledging any slowdown. It's not acknowledging all the bad voices within the economy at the moment. Having said that, Jayesh, will a rollback at all, is it only a rollback which will bring confidence back? Because, I think the Prime Minister's office is not just concerned about whether Nifty is below 11,000 or above 11,000. It's worried about the long-term impact. How is it supposed to carry out its disinvestment program? With what phase is it supposed to go around the world and invite foreign investors and make India into a $5 trillion economy? It's going to have a major impact on revenue mobilization. Whatever North Bloc thought about, collections as far as long-term capital gains goes is gone.
I think that amount anyway was too small. I think more importantly, you see, these are all tweaks that disturbs people in the weak market, and it really disturbs people because we don't know what is next going to come in, right? In terms of tax or in terms of any structural change or anything. But the reality is there is a slowdown, and frankly speaking, there is no one solution to get back into action against this slowdown, right? And people need to have a serious roundtable with practitioners in the market, as like yesterday Dr. Nayak did say something. I think we need to get the large corporates into confidence, figure it out how to fight it out. It doesn't look like we can turn this around so quickly, but yes, at least the step and direction, if it goes towards that. As of right now, as you said, till yesterday the people believed there was no acknowledgement. At least now there is an acknowledgement. That's a good sign. Then there has to happen consultation, right? Not that you meet somebody and give them 4 points. There's no 4-point bullet to improve economy at that in an overall basis.
This is a very important point. However, this is a very important point also because this is the highest office in the country, and they have acknowledged, because in the last 10 days or so, various market participants on various forums and privately have started kind of resigning to the market, saying that there's a big bear market in India, slowdown of course, but FPI surcharge has dampened sentiment, and government is not really doing a whole lot and stuff like that. So let's get a market voice. Rakesh Arora of Go Advisors, of course he's worked with all these FII institutions before, is also with us. Rakesh, the point that Jayesh was saying on the big exclusive story with my colleague Nayanatara has broken from Delhi, that PM office has actually intervened and has taken stock of this FPI surcharge and the concerns raised by the FPI community, and has engaged in a dialogue to work things around. How do you analyze it as an experienced market participant?
I think it's a very positive development, given that, this government was being blamed of taking unilateral decisions without taking, the affected parties' view into consideration. So from that point of view, it's not just the FPI taxation issue, but broader issue which you guys were discussing, that, whether this government is responsive to the ground realities and is willing to listen to the, complaints and rectify the course of action. So it's a positive development. Let's wait and see how it really pans out. Hopefully it doesn't stop at just one consultation.
Right. So do you think that the two...
Nishit Desai is also with us. Ajay, so let's bring him on board. Nishit Desai, you are a very well-known tax expert in New Delhi as well. Very often you have been seen in the corridors of power, interacting with the Finance Ministry as well as the Prime Minister's office. Mr. Desai, we are being told the Prime Minister's office finally swinging into action, taking stock, calling the Finance Ministry top team, the bureaucrats, asking what is all this about the FPI surcharge. Why is the Indian market becoming the worst in July among all emerging markets? The kind of pullout that you have seen, $2 billion since, of FPIs. Mr. Desai, is the rollback the only solution? And if it has to be rolled back, I have to play devil's advocate. The markets may want that and have demonstrated that. But, will that not put India in poor light, that it is pandering to what the markets want, that it is giving in to the threat of the FPI? And with what face? Will it have to be via amendments? Will it have to be via an ordinance? How can it even be done?
Well, there are a couple of things, first of all. Number one, good news is that there is a rethink and there is a indication of some kind of a rollback. More important thing to see is what lies in detail. The devil lies in the details. And if there is picking around here and there, and what I understand, that there could be one-time tax-free transfer of shares to SPVs, and stuff like that, it will still not solve problem because it is not India-specific issue. It is a global structure. What happens is FPIs are like institutions, including foreign mutual funds and other kind of institutions, which have very small investors, including pension plans overseas, right? Now, these are set up as what you call trust, under, say, for example, Massachusetts Business Trust in Boston, let's say, okay? Now, that law requires you to be incorporating or setting up an entity in that form. Now, demand from them to change into an SPV like company or something like that is non-starter. Number one, we need to understand the realities. Now, look at, they got $100 billion funds, say, under management. They invest world over. India may constitute less than 0.5% of the total allocation. And for that 1% or 0.5% allocation, they will change the whole global structure. I think we need to be realistic a little bit and see that we do not further complicate the law. As it is, it is not $2 billion that are taken back by FPI, which is only one part of the game. But $100 billion market cap is washed out. Who is really suffering? It is the small investor in India, small investor abroad, everywhere. I think this is where we are really not understanding that, the tax is imposed at a vehicle level. So small investor even doesn't know that top of the line has been cut off, from their hands. So, they only receive whatever they receive. They don't feel that the tax is on them. Actually, tax is on them indirectly. So this is what we need to see. Let us make law as simple as possible. Number two, and very important, no country in the world, maybe barring one or two, taxes foreign portfolio investors. Okay? No country. So look at all the countries in the world. Now we are first of all competing on returns from India, okay, against China, which is giving 7%. Our dollar return is about 3%. Other countries have been giving better returns. And on the top of it, you have this tax. So foreign tax is a cost. So net of tax, they are making whole market unpredictable and, I would say unproductive in that sense as well. So let us do something, sit together. I'm glad that PMO has taken charge of this. I think that is extremely good thing that they have taken cognizance of the fact that we are all affected. So let us not pick around here and there. So that is one part. Second part about the process. One possibility is to have ordinance. Otherwise, there are separate legislation which may take its own time. But ordinance will be after the parliament session gets over.
Right.
Number two. And number three, there is a possibility, please don't hold me to that, but under Section 119, also there is a possibility to give compensation to FPIs, which are registered with SEBI and CAT3. Even CAT3 has equally similar issues. So I think both these things together will bring back market to some stability, and then we'll have to build on that. We need $5 trillion. We want to make $5 trillion. We need huge amount of, today it's only 2% of GDP, I think, is FDI. But overall, we need huge amount of investment. We want to vitiate the atmosphere. This is what my quick comment on.
So if I could now just come to Sandeep Parekh, some very relevant points that have been raised by Nishit Desai. Forget the FPI. That's exactly what the Prime Minister's office is also concerned about, the long-term economic impact. You can't have disinvestment programs, revenue mobilization. All of that is going to take a big hit if you're going to see this kind of a panic in the equity market at a time when we talk of financial inclusion. The government may have the intent to show that it can actually reverse a measure like this, because a lot will also be talked about, for example, Soot Woot Ki Sarkar. A lot will also be talked about its pandering to the market. I think that is the biggest question. The FPIs have demonstrated with the best possible way by pulling out. They want nothing less than a rollback. Do you think that is a fair demand?
Hi, Nayanatara. Thanks for having me. So I think, I agree with all the points of Mr. Desai. I'd also like to let's also look at the bigger picture. I think if we are a capital-starved economy, we need capital. And I don't just mean foreign portfolio capital, I mean domestic capital. So I think we've kind of lost sight of the bigger picture that we need, especially when the economy is in a funk, we really need to reduce taxes across the board, both the indirect taxes, direct taxes. And unless there are lots of revival efforts made and all the taxpayer money is actually, so much of it is sinking into white elephants like Air India, I think that there has to be complete rethink of the government in terms of, maximum governance and minimum government. And, reduce taxes, just bring out the forces of economic reform. And I think that's a much bigger story which needs to be told. And that's pretty much the only way in which we can get the economy back on its leg. And of course, when things are good, I think longer term taxation view can be taken. But I mean, this is probably the worst time in the last 15 years to increase taxes so dramatically.
Sandeep, stay with us. Just a word from Rakesh on, there is another, though people are welcoming this particular thing and at least the street and large part of the industry want resolution on this because they see this issue seem to have ruffled a lot of feathers among the investor community and the market is taking a brunt. But the domestic investing community may also say that, why only FPI should be favored in terms of taxation. It should be a level playing field for both the category of investors. Rakesh, what do you think about that?
Even the alternative investment funds the government has been promoting, they all come through a trust structure. So they also would need a resolution. It's not just the FPIs. And if you have heard the finance minister correctly, he has been mentioning that, there's no intention to really tax these guys. So, changing the provision is not kind of a rollback. They already say they don't want to tax them. And so it just needs to be worded properly. And hopefully things will resolve pretty soon.
Right. All right, gentlemen, all of you. That was a big mega exclusive which my colleague Nayanatara broke. Thanks very much for joining us, Sandeep, Rakesh, Mr. Mehta. And thank you very much, Nayanatara, for that mega news break. The final news break, at least it is a great way of ending the week. People will go back hopeful, the traders and a lot of market participants, that some kind of an olive branch will improve sentiment. In fact, Avik Mitra is also here with us on the show now, joining in from Delhi. He, of course, advises a lot of big HNIs and keeps a close watch on the macro situation. Avik, you must be listening to the commentary on this big news break. Do you think, and you have been an overseas investor in individual capacity in your earlier avatar, will this douse at least improve sentiment on street?
Yeah, I hope so. Because initially I thought it is just an error. So, and it would be corrected by because before the passage of the bill. But when that error has been passed, so it needs to be corrected. So that's it. We initially had a opinion that this is just an error which has happened by mistake, and I think that is also being told by FM. But when it is passed through in the bill and passed through the parliament, then we think it has become a little tricky now, and it needs a stronger and corrective action. And I hope when PMO is intervening here, something good would happen.
Beyond this, of course, there's also a big slowdown in the economy which is playing out, having its own weight on the market. What is your own portfolio approach in such a kind of a phase? You have navigated slowdowns earlier before in previous cycles.
Ajay, I think what happened is that as I wrote to my investor community yesterday, that from the previous cycles and this slowdown and this market meltdown is a little different, because last two occasions which I have at least seen, there were global issues. Like in 2008-9, we had this global problem which everybody knows. 2011-13, we had the problems of first US downgrade, then there was a Greece problem, then there was a taper tantrum, and everywhere the issues were there. But this time, if you see that it is specifically focused on India, number one, and number two is that this is basically related to policy issues which are really stalling the economy in places like non-release of many kind of dues which government has with the industry, right? Tax refunds, like GST refunds, like payments from ACBs, payments from NHAI, and this kind of area. So this is choking the liquidity flow, and ultimately when the liquidity flow dries up, then the postponement of purchase happens, or maybe there is a structural downturn also in the auto sector, which I have discussed in an earlier show in your earlier program in your channel. But at the same time, the severe downturn has got to do with this choking up of funds and consumer sentiment getting completely knocked off from that hope to almost despair now.
You know, we were just talking to Jayesh Mehta of Bank of America earlier in the show, and he was saying that there are clear signs of improvement in liquidity situation, and the way indications are, there could be steep rate cuts ahead, yes, even further over and above what has happened. So if transmission improves, do you think there's a case for Indian economy to bottom out in the next 2 quarters?
I think that first of all, the just rate cut won't really improve the investment cycle, because nobody sets up a steel plant because there is a 2% cut in rate, or a auto plant, or things like that. But obviously that will improve the sentiment, and there is enough liquidity in the system. Only thing, the liquidity is not being transferred to the consumer economy. If you go and talk to any small entrepreneur or any mid-sized entrepreneur, they say that for getting 20-25 lakh of rupees, we are borrowing at a very high rate from the outside the systemic market or outside the organized market, simply because the banks are not willing to give credit and asking for the three times collateral, which sometimes is not possible for them to provide. And I know few cases personally in this kind of situations. Now, this transmission can happen only when there is a confidence back in the system. The person who is lending should also be confident that tomorrow if something happens to my loan, I won't be hauled up. So, ultimately, a capitalist society is built on trust. It cannot be built on suspicion. So I think that is a broader kind of an area which make me concerned on these issues. So and that view I have developed, I think, over last almost a month, which I was thinking about, because still last month I was quite okay, because things were bad but not that bad. But when I find that a kind of an indifferent approach, which hopefully is being changed from today as I hear from you, then it is a good sign. But otherwise we found a kind of a apathy from the policymakers towards actually bettering the situation, when every day things were going from bad to worse. It is hard to believe that it is not known to the policymakers.
Avik, you are not alone. Let me give you those words of solace right now. Several industrialists in the country, many of your friends in the market felt the same. But at least today there is an indication on this mega news break which we have. In fact, we have been speaking to domestic market participants. Let's get a overseas investor, Mark Matthews of Julius Baer, is here to analyze this news for us right all the way from Singapore. He's a old-time India watcher. Mark, thank you very much for coming on the channel today. The big news break we have, our colleague Nayanatara Rai from Delhi, is that Prime Minister's office has engaged with discussions with the FPI community and their advisors, and has taken stock of the situation. There have been over $2 billion of outflows ever since the budget imposed surcharge on FPI community and the inconvenience they were being caused. At least the PMO is taking note of that. So what is your thought as an overseas investor yourself and an observer of the situation?
I think it's very good they're reaching out to investors. They're smart. They want to build confidence in the economy. And they know that FIIs have been consistently selling India since the election and particularly since the budget. They want to know why. And I think the end game is to get ideas on how to get inflows coming back so the currency is stable and they can issue an offshore bond.
In fact, one of the biggest sellers in the earlier plan, would government itself be going forward in the next couple of months because of their divestment targets? So do you think this will really cut ice among the FPI community? Because what is also a possibility is that the outright rollback of that tax may not happen as well.
I don't think the tax is the issue. If you ask yourself what's keeping foreigners away, there's a few things that you could identify. The currency, maybe they're worried about the currency going down. Politics, in other words, certainly a populist budget, and there we're talking about the taxes on the buybacks and the capital gains. I don't think any of those are really the issue. Foreigners don't mind if the rupee goes down or if taxes go up, but they need to see growth to offset those things with capital gains. And so I think what's keeping foreigners away is the weak domestic growth, the domestic GDP growth. And India is very far away from where they live, most of them, and they won't go all the way to invest in a place so far from home unless there's growth or value, but India's never really been a value market compared to China or the rest of Asia. So I don't know what they collected in terms of feedback, but in my mind, the major thing keeping foreigners away is that India's growth is weak, and it needs to be stimulated by more government spending.
Mark, in fact, the market is listening to this news break and analysis of all the experts such as yours in the last half an hour. The Sensex and the Nifty both have come back into the green from almost a 100-point cut. Perhaps it is improving sentiment on the street that Prime Minister's office has engaged in discussions and trying to extend the olive branch. But even if this issue is intelligently handled, what about the issue of growth, which you just said? What would it require from the government side, which is already cash-strapped, to go about really kick-starting growth, not in the medium to long term, but some steps in the near term, in your view?
Well, I think in the absence of money, the only thing that can be done is reform, and I think the biggest green light would be labor market and agricultural sector reform and land reform. And so if they can do those things, which I think were anticipated and why people were very excited about the second mandate of the BJP, is they thought with an even stronger presence in Parliament, it would be easier to pass those tough bills, and I think that's really what, in my own humble opinion, people will be waiting for. Because if you can get those things coming, then there would be a very strong structural case for a longer term for growth in India.
That's correct. That's the hope a lot of investing community back home in India, and of course your colleagues and friends in the FII community also are pinning their hopes to. I hope they deliver on that promise as well. Mark, thank you so much for accommodating this request from us and analyzing the big news break at ET Now today, that after 20 days of outright selling from FIIs, over $2 billion being sold off from that decision of taxes on FPI community in the form of surcharge. Now Prime Minister's office has also engaged with discussion and has taken stock of the situation and is mulling over some midway or middle path could be adopted or not. Let's see how this big story unfolds from here on. Time for a short break. More news and updates on the other side.